Paul, it's interesting when the micro becomes the macro, because they have the micro story around Samsung and their earnings. But given the scale and presence of Samsung and one or two other companies in the Korean market, this then has sort of market moving potential at a wider level. What did you make of the numbers out of Samsung and their ability to move the Kospi?
Yeah, good morning, Anna. I think that that's increasingly becoming the case, actually, that Asia's markets and Asia's companies are influencing global market dynamics, particularly those in the US tech stack. For Samsung today, what we saw was an extraordinary jump in earnings revenue, but at the same time, a market that is topping out somewhat, and so came back off those highs despite it beating analyst expectations. So I think there's a couple of things going on here. One, a rotation trade, which we've seen over the recent sessions, where people are putting their cash into other assets beyond technology, and that's seen in a couple of things. So although the Kospi got hammered today, it was still only down by a ratio of 4 companies falling to 3 companies rising. So not an all-out kind of defensive play. If you look in Japan as well, for example, the Topics there, which is tech light, is outperforming the Nikkei. So some signs there of that rotation trade too, though. For Samsung's earnings, actually, often when it reports a profit beat, so out of the last 16 times it's reported a profit beat like today's, on 10 of those occasions it's fallen. So it's seen as something of an opportunity for investors to take some of the profits off the table too. And actually, sometimes when it misses, in fact, more times when it misses, it rises. So a slightly counter-intuitive indicator there.
In terms of what else we're watching this morning, the auction we saw in Japan for 30 years, I thought was really interesting. Yields may be getting to the point where demand is there.
That's right, guys. So extremely strong demand at that auction, with yields just on the brink of 4%. So that seems to be something of a level where long-term investors are more willing to look at Japanese government bonds. We did also hear from the government some more reassuring signs there. One of the ministers, called Kyuchi, was talking about the idea that no, there's no government policy to try to prevent the Bank of Japan from raising interest rates. Why does that matter? The higher they can get short-term interest rates and the faster they can, the more it sort of gives market confidence in their inflation fighting dynamics, and therefore the more it can bring down those longer term interest rates.
And let me ask you, Paul, about what's going on in China. We've seen the PBOC unveiling measures to cement Hong Kong's yuan hub status. What are expectations like there?
Yeah, so I think that this is an important sort of dynamic, not for immediate pricing, but for the very long-term view. China, again, pushing the yuan as an international currency of funding and trading. So in particular, it's expanding the offshore yuan markets in terms of how much the HKMA is able to release into the market, and it's allowing more onshore market participants to buy CNH denominated bonds. So it's all about getting more bond issuance in Hong Kong and getting more money into there to swell the market. But the US is fighting back somewhat here as well. We hear Besson talking more and more about the idea that he wants to have a strong dollar. So that tension is starting to ratchet up between the superpowers over currency controls.